All right, welcome everybody, and thank you for joining us for session 2 of this Not Your Ordinary Summer. Today is Taco Tuesday, and we will be talking about, or we will talk about financial literacy. I got to get that pun in there because if we have more money, then we have more tacos. We will have a special guest join us today that we will introduce in just a little bit. But before we get started, allow us to reintroduce ourselves. And because it is Taco Tuesday, we have our tacos, so we're going to let you know what we're eating and snacking on today. I'll go first. My name is Jay Boss. I'm a program director here for Fort Worth ISD. And today I am enjoying Taco Cabana, just a bean and rice salsa taco from Taco Cabana. So that's my snack for today.
I'll go next. I'm Miss Fennell, and I made some tacos right before this, just a little steak taco that y'all might see me eating while we do this. So, hello.
My name is Stephanie Swenson, and I'm the outreach coordinator. And today I am snacking on some guacamole, but instead of guacamole, it's avocados and cottage cheese. It's really good. So that was some chips. And we have our taco piñata in the background.
Hi, I'm Shauna Worley. I'm the program director for Crowley. And today I'm eating some street taco. Okay, hold on. Let me some street tacos from I don't really know where, but they're really good.
All right, y'all. Thanks. That all looks delicious. So now we'll get into our rules of engagement. So, Stephanie, can you go ahead and take us away with that?
Yes. So if you were tuning in last week, you heard these, but we just want to go over them each week in case there's new people coming on and listening to our video / podcast. So, Shauna, please mute your mic when others are talking. And also videos off and name changes. So Jay actually has access to do this. So they will be changing your name just for confidentiality reasons. We don't want anyone to be able to identify who you are. And then our third rule of engagement is take space, make space. So this means 3 before me. So if I'm speaking or if I'm asking a question, I'm going to make sure that 2 other people get to speak after me before I speak again. And then also we want to make sure that you're aware that we are all mandated reporters on the call. And what this means is we want you to share. This is a safe space. However, if you do share something with us today that is harmful to yourself or harmful to others, it is our responsibility as Girls Inc. staff. We have to report that. So just keeping that in mind with what you're sharing. And then also for attendance purposes, please private message Kanai and tell her that you are here. If you're viewing this on Instagram or if you view it or listen to it on YouTube, please, you can leave a comment, but we are actually going to be sending out a survey, and we're going to talk about the survey at the end. But once you complete the video or you can finish listening to it, you will be able to fill out a survey that shows us that you are here in attendance. So thank you all for joining us, and we are going to get started. So as Jay said earlier, we have a special guest today. And that special guest is Kayla Swenson. She is my mom, but she's also, she works in the financial world. So I'm gonna actually let her come on and introduce herself to you. So here is my mom.
Woo!
Okay. Hello, my name is Kayla Swenson, and I am a financial advisor for Voya Financial Advisors. I actually received my Bachelor of Business Administration in General Business from the University of Texas at Austin. I've been in this business for about 35 years, and I've been licensed as a financial advisor for about the past 12. When I say licensed, I hold a Series 7 license, which is the federal license that allows me to give financial advice. I also have a Series 66, which is my state license, which allows me to practice in Texas. I also have a general lines life insurance license, which means I can sell life insurance as well as some other financial products. So I have been in the business now in different aspects of it for over 35 years.
So we are going to ask you a series of 10 questions, and there are today 4 of us on the team. So we're going to kind of popcorn question, and I'm going to start with the first question. And our first question that we have for you, Kayla, is what are different professions that go along with a financial degree or background?
Well, as I mentioned before, I'm a financial advisor and hold the licenses to practice as a financial advisor. But with a general business degree, you have lots of outlets and lots of ways that you can get into different aspects of the finance world, such as a banker or an accountant or CPA, certified professional accountant. Now, those probably would require I know they require different licenses and would require different exams that you would have to pass, but there's lots of ways that you can break into the finance world.
I also have a question. Sorry. My question is, what is a savings account and how do you start one?
Well, a savings account is usually associated with a bank or a credit union, and you can open a savings account very much just like you would open a checking account by filling out whatever paperwork or application they would have for you at the banking institution you choose. Sometimes banks may have a minimum as to what you would have to start or open the account with, but they would let you know that when you made the deposit. And the other part to a savings account is that you will actually earn interest on your money. And when I say earn interest on your money, I mean that the banking institution that you choose will pay you money for leaving what you have deposited in that savings account. The percentage that banks pay you in interest is pretty low right now, but it still is a way to earn money on your money. And it's a great idea to have a savings account as a backup in case you need money for an emergency or some unexpected event.
Thank you. And our third question.
All right. The third question is, what is the best way to manage your money? Is it through a budget?
Yes, the best way to manage your money is to begin with a budget. You can start a budget by writing down how much you earn and then compare that to how much you spend. When making a budget, you need to start with the bills that you know you're going to have to pay every month. So that would be something such as your rent or your home mortgage, your utilities, your insurance, if you have a car payment, the maintenance on your car or home, and as always, we have to save or set aside money for taxes. Once you know what your monthly expenses will be, you can then set it aside either to put in a savings account or some other investment. Then whatever's left after that, you can designate for fun. So whether that would be a dinner and a movie, a new dress, a manicure, a pedicure, whatever you would want that would treat yourself for that month.
I like it. Treat yourself.
That's
All
right. Treat yourself.
I have number 4 as well. So the fourth question is, what are taxes and how are they factored into your budget?
Taxes are a part of life and everyone has to pay them. We all have to pay federal income taxes to the Internal Revenue Service, which is the government agency responsible for the collection of taxes and the enforcement of tax laws. A portion of the federal income taxes that you owe will be taken out of your paycheck every every month or every time you get paid by your employer. But when the year's over, if you have not paid in enough taxes, you will owe the Internal Revenue or IRS when you file your taxes by April 15th of the next year. The good news is, if you paid in too much in taxes, you will get a refund from the IRS. They owe you. We do not have a state tax in Texas, but other states do charge a state income tax. And all of you know that we pay sales tax on pretty much everything that we buy except food. So if you, what I'm saying there is if you go to the store and you buy makeup, you will pay taxes on the makeup. But if you buy eggs, you do not pay any taxes on food. If you own a home, you also have to pay property taxes every year based on the value of your home. So as you can see, taxes can take up a large part of your budget, and that's why it's so important to set aside money to have available, especially if you owe the Internal Revenue Service.
So before we move on to the next question, if there are questions in the chat box, we are going to do, I know last time we answered throughout, but we're going to answer those chat box questions at the very end. So you can type them in there and then we will read them off at the end.
All right, thank you, Stephanie. And thank you, Ms. Swenson, for joining us on this call. So my question for you is, what is a 401k and how do you get one started?
A 401k is basically a retirement savings account. So for most people, this is the easiest and best place to start saving for retirement and investing for retirement. It's the most common employee-sponsored retirement plan that enables employees to make contributions from every paycheck. Most 401ks are matched by their employer to some degree. In other words, your employer is helping in a way to fund your retirement for you. Your contributions to a regular 401k are deducted from your paycheck on a pre-tax basis. And this means the 401k contribution goes out before taxes are taken out of that contribution. And the good news there is you're making money on more money because the government did not get the taxes taken out of it before. If you take a withdrawal, though, out of a 401k, you will be subject to taxes because everything in there is pre-tax. Most of them have to stay in till you're around 59 and a half years old. Otherwise, you will also pay a penalty as well as taxes. And one last thing, some employers require that you have 1 year, 6 months on a job before they'll allow you to join their 401k plan. But it's a great way to let the employer help pay for your retirement.
So my question is, what is a credit score and how does it impact your life? How can you increase your credit score?
A credit score is a number that represents the risk a lender takes when you borrow money. A credit score is based on your credit history, the number of accounts you open, how much money you have borrowed, and your repayment history. A credit score is primarily based on a credit report, which is information typically sourced from the credit bureau. Lenders use credit scores to evaluate the probability that an individual will repay loans on time. You can increase your credit score by making all your payments on time. The bottom line is, the higher your credit score, the lower the risk to the lender and the more willing that lender and other lenders will be to allow you to borrow money.
And how do you get a credit card? Oh, sorry. What is a student loan and how does it affect your savings?
Okay, Well, a loan is any money that you borrow and must pay back with interest. If you decide to take out a loan, you need to make sure you understand the terms of the loan and the conditions of the loan. Student loans can come from the federal government, from private banks, and also from other private sectors or other organizations. Loans made by the federal government usually have more benefits than loans made by banks. The amount you borrow on a student loan depends on if you're an undergraduate student or a graduate student. An undergraduate student can borrow between $5,500 to $12,500, depending on what year they are in school, whereas a graduate student can borrow up to $20,200 each year. But remember, you can borrow less than what the school offers and then request more funds later if you need them. You should only borrow what you need. Now, to apply for a federal student loan, you must first complete and submit a free application for federal student aid, or a FAFSA form. Based on the results of your FAFSA form, your college or career school will send you a financial aid offer, which may include federal student loans. You don't have to begin repaying your federal student loans until after you have graduated or leave college or drop below half-time. Federal student loans are definitely an investment in your future, but it's important to understand that a loan is a legal obligation that makes you responsible for repaying the amount with interest.
All right. Our next question is a two-part question. It is, how do you get a credit card? And then it also says, is it better to pay it off at once or to pay it off a little bit at a time?
Great. Okay. To apply for a credit card, you will need to fill out an application. Usually what they ask for on those applications, your name, date of birth, social security number, as well as your current income and where you live. That means whether you rent or whether you own your home and how long you have been in that residence. Credit card companies will check your credit score that we talked about before, and that will determine if they will allow you to take out a credit card. But before they'll issue that credit card, they will also check to see if you've made payments in a timely manner on your other loans, whether you have a car payment or a student loan or something such as that. No matter what card you choose, whether it's a Kohl's card, a MasterCard, or a Exxon gas card, it is always better to pay your balance in full every month if at all possible. Credit card companies charge very high interest rates. So if you don't pay your balance in full each month, your credit card debt, or what you still owe to the credit card company, can add up very fast.
All right, and the next question is, what's the difference between good debt and bad debt?
The most important thing to consider when buying anything on credit, so either with a credit card or through a loan, or taking out that loan, is whether the debt incurred is good debt or bad debt. Good debt is an investment that grows in value or generates long-term income. Taking out a student loan is a great example of good debt. First of all, student loans usually have a low interest rates compared to other types of debt. Secondly, a college education increases your value as an employee and raises your potential for future income. Taking out a mortgage to buy a home is also usually considered good debt as well. The hope on taking out a mortgage is that your home will increase in value over time, enough to cancel out the interest that you've paid over the years on that loan. Good debt can also simply be lower interest debt. In other words, lower interest rates that you take out on a loan. Bad debt is debt incurred to buy things that quickly lose their value and do not really generate any long-term income. Bad debt is also debt that carries a high interest rate, like credit card debt. Too much of any kind of debt, no matter the opportunity it might create, can turn into bad debt. So you need to be cautious and careful about how much debt you incur.
Okay, so as teenagers, sometimes teenagers don't think about insurance and having to pay that in the future. So my question is, how long can you stay on your parents' insurance, and what are the options once you're no longer able to be claimed on your parents' insurance?
Okay, it's a great question. By federal law, you can stay on your parents' insurance until you are 26 years old. After that, you will hopefully be on a benefits package with your employer and can get health insurance through your job. If you do not get benefits through your job, though, you can go into what's called the open market and shop for health insurance. One example out there would be Obamacare. Sometimes health insurance on the open market, though, can be expensive, so it's worth it to shop around. Another option is referred to as COBRA, C-O-B-R-A, which is offered through the federal government as well. The plan gives workers and their families who lose their health benefits the right to choose to continue group health benefits provided by that group health plan for a limited period of time. Under certain circumstances, such as voluntary or involuntary job loss, transition between jobs, death, divorce, and other life events. Individuals are generally required to pay the entire premium, though, for coverage on COBRA, and it can become very expensive.
So now we're going to pass it over to Kanai. She has been in the chat box, and so there are some questions that she's going to ask you to answer from the chat box.
Perfect.
All right, so we have 3 right now, but if anyone else has any questions, just put them in the chat box. So the first one is, can you invest money as a teenager, such as stocks, etc.? So as a teenager, how can you invest money?
You absolutely can. I usually tell people what I would do. You need to make sure you have the money behind it to invest in the stocks. You also need to be careful because you have to be willing to, as the price of the stock goes up and you earn money, you have to be willing to ride the roller coaster that if the price of the stock goes down, you may lose some money. But there are lots of companies out there that will definitely, you do it online. You just do it online. So I can tell you those companies if that's what you would like to hear. E-Trade, Charles Schwab. There's a lot of them out there that you can very easily just go online and invest. That's not who I represent, but they are great companies for a brand new person to get started in investing in stock. So I give fair commercials to everyone.
All right, so another question is, what is the best way to start building your credit as a young adult or as a teenager?
Well, it is a little bit hard, but some of the credit card companies do have student credit cards, and that would be a great way to start. You probably will not be given what they call a large line of credit, meaning you might only get to charge $500 to $1,000 on that student credit card. But if you pay it off, they will continually increase your line of credit. So if you start with 500, pay it off, make sure you pay it off, then they will probably go ahead and continue to increase your credit, your line of credit to 1,000.
Yeah, we're doing, I'm sorry.
In time, they will gradually increase your credit. So, and you can look for those credit card companies even online, and even put in student, those that would give a credit card to a student. So, and find them that way.
Yes, make sure you use your resources.
Exactly.
All right, so we have two more. What is a cosigner and when should I get one?
Well, cosigner is usually someone that does have a good credit score, and it would be responsible if you did not make your payment on a loan. Can also even be something like an apartment lease. So it's just usually a parent or guardian or a trusted someone that you would have sign with you, so that it's basically just to say if you don't make the payments, your cosigner is able to help you make the payments or would step in and make the payments for you. And you don't have to have one normally unless it is required by, whether it would be your apartment or someone that you're trying to take a loan, car loan or something like that. But they only if they ask for a cosigner would you need to provide one.
All right, so we have two more. We got one more in the chat box. The next one is, are medical bills good or bad debt? That's a good question.
Well, you can't help if you have a medical issue. That much you cannot help. I always recommend that if they do get larger than you're able to take care of, call them immediately and work with them. Most of them will either put you on a payment plan or even work to lower what you owe. I mean, there's no promises on the lowering what you owe, but I would say overall, most of them would definitely work with you to put you on a payment plan, or are very willing to help you out in that way.
All right, so our last question is, oh, hold on, we got more. So the next question is, how does claiming or being claimed on someone's taxes work?
All right, ask me one more time. How does
claiming or being claimed on someone's taxes work?
Okay.
So I guess if your parent claims you on their taxes.
Okay, so that comes under a dependency, like there's on the forms where there's a W-9, or even when you fill out your tax form for the IRS to send in on April the 15th. If you claim 0 on your dependents, then they will probably withhold the maximum federal taxes. There's a table set up on how much to withhold federal taxes on what you earn per pay period. If you claim one dependent, if you claim 2, whatever, usually it means you're a family or you have a child or your parents claim you, they take out less per pay period. The federal government on that table would take a little bit less depending on the dependents you have, because they feel that you need that little extra money per month to take care of those that are still living with you at home. Now, in the end, if you claim too many dependents, you might owe more when you file your taxes on April 15th to the IRS. But if you didn't claim enough dependents, then like I said, the good news is when they send you a check back. So it's just a matter of, it's a table that's set up by the federal government that once you put the number of dependents, they will then, you go across the board based on your salary, and that's what you deduct out of your paycheck for that month. So it's a table set up.
All right, this is a really, really good question. I think this is our last one. If anyone has any more, you can write them in the chat box, but we're running out of time. We're gonna go a little bit over today, but just write them in the chat box, and if anything, we can get back, and we'll get those questions to Ms. Swenson, okay? All right, so the last question is, what can be done if your parents used your name and info when you were a child and now you have a low credit score, but technically it isn't your debt? So when parents use, teenagers or someone's information, but now they're an adult and they have that debt.
So there are basically 3 credit companies that will give you a copy of your credit report, and you can Google them, Experian, Transamerican, and I may have a note here on the 3rd one. Once a year, you can get a free credit report, so you would know exactly where you stand on your credit report. If there is an issue, you can contact, and I would contact all 3 of those that give their credit reports or give you your credit report per year, and let them know what happened. based on your social security number. Just let them know exactly. I mean, they have to be just as secure as you do or I do in my business. They cannot give out any other information except what you ask. So I would contact all three of them. They are listed. If you just Google, credit reports, they automatically come up. And once a year, you can get your free credit report. And I would go ahead and get it from all three of them. And if there's still a problem, I would report back to all three of them the exact situation.
And we have it typed in the chat box, the three places you can get your credit score.
And there's one more question, and I know I said that was going to be the last one, but
That's
this is
okay.
a good one. So after this one, this will be the last one.
Hey, I'm delighted. Yeah.
And
great.
yes, and thank you for joining us. So this question asks, does deferring your loans harm you? I'm assuming student loans. And does interest get deferred usually, or just the principal payment? So this is
Well, you would have, that's one other situation you have to take up with the people that have given you the loan. I will tell you, on any loan you pay back, they put it on the interest first and then the principal. So your principal most likely will not go down, unless you continue to make those payments. So if you are going to be behind, I think the best thing to do is to contact the lender, let them know what your situation is. Sometimes you can, as we always, sometimes you can refinance. We all hear that word now, especially on homes. So sometimes they might even let you renegotiate or refinance whatever it is that you took the loan on, and come back with some different terms or a different pay period or whatever they can work with you on that would make it where you could afford your payments at this time. Any more?
I think that's all the questions that we have, but we're going to go over a couple of different things. I think Wendy's going to hop in, and then after this, we're going to close and give some information.
And if there's any additional, I'm going to let my mom go, but if there's any additional questions, y'all go ahead and type them in the chat box, and I can type her answers and send them out via email, or we'll get them out to you. So don't be afraid to keep asking questions, but I'm going to let her go, and we'll continue on with Wendy.
And thank you for allowing me to be the guest speaker today. I enjoyed it.
Thank you for joining us.
Thank you. Bye-bye.
Thank you, Kayla.
Thank you.
Hey, it's Wendy. I am typing in the chat box. All participants, even the staff, can do this as well. You're going to go to, I'm typing in the chat box so you can see. You're going to go to the website that I just sent, and you are going to type in a special code to take a quick little survey on what your experience and what you learned today is. So hang on a second. Oh man, of course. There we go. Thank you, Jay.
Got you, Wendy.
Thank you. You can't find it whenever you need to. So if everybody will go to menti.com, it's going to ask for a code, and you're going to type in that code, and then you should be able to start taking a survey.
And to the North Crowley girls, I can send you, who are on this call, I'll send that to you through Remind after this call. But it's in the chat box, but I'll also send it as a reminder. All right.
Also, for participants that take that survey, you will be entered into a raffle for a chance to win a gift card. So please make sure you go take the survey, let us know so that you can have a chance to win a gift card.
All right, so we're going to close this out, but I just wanted to remind everyone that next week we're not going to have a group, but we're going to follow back up the following week. So we will have a group on the 7th. So next week on the 30th, we won't have a group. That's going to be some off time for the program staff, but we'll see you the following week. So I hope everyone learned something today, and then enjoy your weekend. We have the 4th of July holiday coming up, so just enjoy your week, and we will see you in about 2 weeks or a week and a half. So thank you for joining.
Thanks for joining, everybody.
Thank y'all.